Ladies and gentlemen, I am extremely excited to have today's guest on the show. He is the co-founder and CEO of Coinfloor, the UK's longest-running Bitcoin exchange. This gentleman also has over 20 years of experience building online marketplaces and bringing virtual currencies to tens of millions of people. This gentleman's mission and focus is on making it easy for anyone to learn about, invest in, and own Bitcoin, the world's best savings technology. A true man of the people. I'm very excited to have today's guest on the show. Welcome to the Crypto News Podcast, Obi Nwosu. Obi, welcome to the show.
Thank you very much, Matt. That's an amazing introduction. I love it.
Thank you. Much appreciated. I do have a touching and a very important point that I think we should jump into first, and that is what happened yesterday. Today we are recording on Thursday, May 20th, and on Wednesday, May 19th of 2021, the absolute shit show occurred. What happened there? We got to talk about it.
I mean, if I was going to put it into a sentence, the markets healed themselves. That's if I was going to put it in a sentence. There were a number of things that prompted the sell-off, for want of a better word. And there are many theories. So I'm fortunate enough to be, based on what I do, talk to people who are, for want of a better phrase, OGs, people who've been around in the industry for a long time, large traders, owners of other exchanges, etc. And on the other end of the scale, you have people who are new entrants, and we see them all the time. And I always like to spend time talking to people who are new to the space. In fact, yesterday, I was just doing a panel session with people who are literally just starting in the space. And it's interesting to see from both ends of the spectrum what people's insights and concerns and the reasons why they sold off or whether they were selling off. So some of the things we noticed was, one, there is a view that some people have the view that Elon Musk's comments prompted this sell-off. Whether you believe this or not, there are a lot of people at both ends of the spectrum who think that's the case. Others think that it's related to the pronouncement of China, in quotes, banning Bitcoin for the, I don't know, I've lost track of how many times that's happened.
900th time.
Banning crypto. And that's, some people think that was what caused the concern, again, at both ends of the spectrum. I'm always interested in ones where at both ends of the spectrum people have a similar view. And another, there was this sort of interesting story about the founder of Tron and an attempt to liquidate his apparent long position.
I saw that too.
Yeah, whichever one you believe, there was an increase in fear and there was a sell-off in the market. But what was interesting was, if you look at institutional, corporate, larger holders, they tended to hold, in fact, or accumulate during that period. So they were steadily sticking to their positions or buying more. And it tended to be newer entrants who hadn't yet gone through one of these cycles before, who basically panic sold or sold more than they should have done. And so, and also, unfortunately, we still have this situation where many of the large exchanges went offline or had reduced capacity, even if they've been in the industry for 5 to 8 years or more, and raised umpteen amounts of money. They still seem to not be able to handle these situations. And now I will say that, and tomorrow Coinfloor will have a situation, but touch wood, and I'm knocking on my head right now. Touch wood, hopefully we continue to do reasonably well in those situations. But that makes it hard for people to buy the dip, and that can cause, when that happens, and that can cause the dips to be more prolonged. Now, what was interesting was we saw Bitcoin had some sell-off, but it did much better than every other cryptocurrency, which will highlight to people the importance and the difference of Bitcoin versus many of the others. And that's part of the painful but ongoing education process that we will continue to see. What was interesting was that, for me as well, personally, was certain decentralized protocols, and there were many of them. Some of them had significant increases in costs to use and so on, but they continued ticking while the centralized systems failed. So that was interesting. And also what's interesting is that most of these rumors are temporary. With Elon Musk, he keeps changing his mind. At one point he said he might sell. The next point he said he's diamond hands. When people change their mind so frequently like that, eventually people will ignore them because they'll become noise.
Right.
And so that's, again, a good thing that we start to ignore celebrities, whether they're right or wrong, and learn to educate ourselves and make our own informed decisions. With the China ban, in quotes, ban, people will realize after dust has settled that actually it was a reiteration of an existing policy from 2017. So no new news. And again, so people will understand that as well. So we've got a reduced price in the market. We've got it means that people can now enter the market. They saw the price at 60K for Bitcoin, for example. Now it's at 40K. So in relative terms, if you've got a sort of this short memory cycle, this seems like a good time to buy in. The markets had a chance to recover and correct. So that's the situation we had, and it's a natural part of any market, and especially a market in the early stages that we have right now with crypto and Bitcoin.
You brought up a bunch of really good points there. The one that I want to touch on is the price bottoming out and a lot of people rebuying. Now, I saw some FUD that institutions were looking for a much sexier price to rebuy at, and 30 is a hell of a lot better than 60. Now, they do have the power to liquidate, and just like you said, the founder of Tron, who will go unnamed, but supposedly had I believe that was $1 billion position that got liquidated. That was part of this Reddit post that I saw that was reposted on Twitter, and it was from an analyst at an institutional investment firm that sort of said this was going to happen, and he literally called everything verbatim. Do you think the institutions had anything to do with the sell-off in regards to them wanting to drive the price down to get in at the right price point?
I mean, the short answer is that I don't know whether they did, but I doubt it. But I doubt it's the case. I do think that many people did get liquidated. In the case of the founder of Tron, I don't think that happened in that case, based on information I have, but I cannot confirm whether there was an attempt to do that. What I can say is the market's still pretty young. It's still possible for a tweet or a large holder to move the price for short periods of time. Which is why, unless you really know what you're doing or you have inside information, which is fewer and fewer people in the case of inside information these days, you should think about this from a long-term perspective. And then from a long-term, if you have a long-term mindset, you're shielded from all of these short-term fluctuations. And in fact, you can use that long-term thesis to know when there's an opportunity like this. Because you can have the confidence when when there's blood on the floor and everybody else is running, you can step in and take action.
Keep hodling.
Yeah. BTFD.
BTFC, keep hodling, baby. Another point you brought up was the exchanges going down. This almost screams Robinhood. This was back in, January and February of this year when GameStop and AMC and all of those stocks went to the moon and then ripped all the way back down because you had a company like Robinhood who was only enabling the sell button and the buy button was offline. This is the same thing that happened yesterday, or worse than that, exchanges were just fully offline, no buying, no selling, and you had CoinGecko, CoinMarketCap. You couldn't even check your shit coins. I was scrambling around in the morning going to CoinGecko to check on how my younger boys and gals are doing, and I could not even see what was happening. A little bit of a panic mode, but we're all good. What can exchanges and major crypto companies do in the future to make sure that doesn't happen? Seems like the easy answer would be invest more in infrastructure, technology, so on and so forth. But from someone like me who doesn't have too prominent of a technological background, What's the right answer to fix this?
Yeah, I mean, and to be fair, running an exchange, it's a much more difficult problem than it seems to be. And so there is, the most exchanges deal with multiple cryptocurrencies. And we have taken the approach of only dealing with Bitcoin. That makes our infrastructural technical problem to solve much, much simpler.
Right.
And so it's easier for us to be able to handle situations like this when there's so many less variables. The other thing is, when these things happen, the increases in demand are not just 10%, 20%. They're 10x, 50x. And it's very difficult to architect systems that can handle a growth in usage in a matter of minutes by, more than an order of magnitude. Generally, that's a very difficult thing to do. And most other organizations don't experience that. Maybe, for example, a broadcasting company at the time of a major American football match might see this massive increase in demand for their services,
right,
once or twice a year, but they know that in advance, and they can ramp up in advance for that, and they can have people in the office ready for that demand. Whereas with crypto, it's a weekend, you're going to sleep, and then all of a sudden there's a 10x increase in demand with zero notice. So it's a nearly intractable problem. That being said, there's more that can be done, and I'm sure that all of these exchanges are working hard to do that. Separate, though, to that is the fact that the demand for, whether you like them or love them, the demand for altcoins or shitcoins, or the most extreme, the new diarrhea coins that are coming out, the demand for those is going to increase exponentially. As long as fear exists, fear of missing out, and greed, and the desire to get the sort of ape-like returns that people have seen other people get, even though people are being educated, and we're going to continue to educate, even though people understand that many of these are going to crash and burn and only a few will succeed, we are seeing that people still keep wanting to trade them. And so even though we don't allow them to trade on our exchange, for the reasons that we will probably come into later in this conversation, it's going to continue to happen. And as such, eventually, it's going to grow beyond centralized exchanges. Centralized exchanges have to curate, review. It's centralized. Eventually, it becomes this choke point. And the demand for these coins, just like the demand for websites, eventually goes beyond one company like an AOL or an Yahoo's ability to list. And it will become a decentralized offering. That decentralized offerings will be the only way to handle these in a scalable way. And so for the crypto to crypto, altcoin to altcoin trading stuff, that eventually will be solved by different organizations than these. It'll be solved by the crypto equivalent of the web browser,
right,
some sort of decentralized software that you install yourself and you trade yourself. That's what I predict will happen. Leaving fiat to crypto as the main job of centralized exchanges. And given that thesis, we've already just moved straight to that. We allow you to buy Bitcoin, and once you bought your Bitcoin, you can hold it with us, hold it yourself, because not your keys, not your coin. And we educate people around that. Or you can take some of it, ideally a very small percentage or zero, but we can't stop you from doing that. But you take some of it and trade it or do whatever you want to do with it, but in a decentralized manner, where you're not beholden to the scaling, the almost impossible scaling requirements for a centralized exchange.
Interesting. Before we get into Coinfloor, I have one last question about almost LARPing and ape-sized returns, if you will, and that is leveraged trading. I myself, I've only done it once, and I got a little lucky, and that was good enough for me. I got my toes in the water. Didn't really like the feeling too much, and that is it for me. What's your take on that? I have buddies who are doing like 3x, 5x, 10x. Like, couple sickos who are doing 100x. Like, what, like, what's going on in your head to go 100x long on something?
I mean, if you're going 100x, you're starting to see this as, in your mindset, it's probably similar to the mindset of what's going on when you go to a casino and you go to a horse race and you bet. It's starting to become basically gambling at that stage, because a tiny movement in the wrong direction and you can be wiped out.
Yeah.
But on the other hand, if luck would have it, it goes in your direction, you can make these outsized returns. So that sounds like close to gambling in terms of mindset. So the mindsets are very similar there. And gambling is an industry that's gone on for a very long period of time, and that mindset is appealing to some people. If you're putting in small amounts, going to a horse race, dressing up, having a nice day out, and spending the same amount of money that you would have spent going out partying, that's fine. But if you're putting your life savings into it, that can be a problem.
Yeah.
So it does fulfill it's as you say, it's not a nice feeling, but some people can think of that feeling as exhilarating, that taking some risk. And so there is a sector of people who find it interesting. But it is very risky, and for the vast majority of people, they shouldn't go anywhere near that. And given that we are at the beginning of such an incredible revolution, something that will at least mimic the growth of the internet and the web, you don't need to take that level of risk to have a meaningful sort of impact to your stores of value or investments by just buying effectively shares in this incredible technology and this incredible movement, philosophy, everything that's involved in Bitcoin by itself.
Well said. Let's jump into Coinfloor. You and the team have made some incredible moves and have really dominated and educated a lot of the crypto masses, especially Bitcoin, as that is your bread and butter. I'll leave this open-ended and the floor is yours. Please tell our listeners a little more about Coinfloor.
Well, thank you. So Coinfloor is, as you mentioned, is the UK's longest running Bitcoin exchange. And we were founded in 2013. And at that time, you really didn't have a choice. You were Bitcoin only, because pretty much it was only Bitcoin.
That was it.
It was only Bitcoin that was in any significant way traded. And that was good because it allowed us to understand and internalize the philosophy behind Bitcoin. Now, over time, more cryptocurrencies appeared. Some of them have attempted to build their own philosophies, and with greater or lesser success. But what's become clearer over the years is the power of the original philosophy of Bitcoin. And that original philosophy is like a shield against any form of attempt to take your wealth from you. And if you internalize the idea of not your keys, not your coins, don't trust, verify, these are lessons which, forget other cryptocurrencies, the entire existing financial system that we have today has spent a lot of effort to make you forget. They tell you, don't trust yourself, trust a third party. Don't store things yourself and work out how to manage your own funds. Leave it to us. Now, effectively trying to get us to the point where we generate all this value in the world, and then we don't learn how to look after that value. And the core philosophies of Bitcoin do the exact opposite. And it's because of that reason, our mission has expanded not just to allowing people to purchase cryptocurrency, but instead purchase the most important cryptocurrency, the most impactful cryptocurrency, which is Bitcoin. And also educate people about Bitcoin, about the sector as a whole, but about the philosophies behind Bitcoin. This is beyond money. This is a philosophy for life and many of these elements. And we think it's really important to share that with people. And as a result, we get incredible responses from the community. And we feel very blessed to be in a position where we can share that information with the community and the world. So
Coinfloor has a multitude of really cool products. My favorite that I really want to get into is auto buy. I think, let's start with auto buy. Exactly like it sounds like you set up a wire transfer, a bank transfer, and Bitcoin automatically is purchased as, funds, whatever fiat currency you're using is wired from your bank account to Coinfloor, who then purchases Bitcoin, whether that be sats or if you're a sicko, full Bitcoins on your behalf. And it's just you keep accumulating. How did that idea come to fruition? And could you, if I did not explain that correctly, could you please walk me through exactly how that works?
Well, first of all, the explanation was really good. And we'll talk afterwards how you could potentially come to work for us, because that explanation was amazing.
Love it.
But being serious, that we first made the big step of being Bitcoin only and going Bitcoin only. That was the big step. After that, we wanted to make the process of investing as simple as possible. And we allow, with the auto buy product, 2 ways of investing. You can still just buy as a series of single one-off purchases, Bitcoin. But even when you're doing that, the process is radically simpler than many other sites. Normally you have to go in, register. After you've registered and signed up, you then would transfer a certain amount of money from your bank account to the exchange or the crypto company. Then you would have to select from a whole set of cryptocurrencies which ones you want to buy, and then you have to then buy. There's some action to buy those. So there's multiple steps. With what we do, if you want to make a single purchase, for example, we reduce it down to 2 steps. You sign up, and we are making the sign-up process as simple as we possibly can. And there's a number of announcements that we're making in the coming few weeks around making that as simple as possible for our users. Or our new users, because even though you only do it once, it's your first experience, the registration process, and we want to make that simple.
That matters.
And then after that one step, the next step is you log in, you effectively get the payment details for where you want to send the money to buy, and send money to that address. And given that we know that you're sending money to our address to buy Bitcoin, we automatically purchase it for you, mail you, notify you when it's been purchased at the market rate, and then add it to your balance. So all of those separate steps have been merged into one step of sending and automatically buying. The other thing that you can do is you can take it a step further, and you can set up a standing order, which is a recurring payment from your bank. So you just log into your banking app and set up a recurring payment, or call them up and set up a recurring payment with the same details, and every time the payment comes through, it will do the same, automatically buying for you, which means that you can do something known as dollar cost averaging, or in the UK, it would be called pound cost averaging, I guess, but the international term is dollar cost averaging. Now, this is really interesting because you can trade, and trading is fun, but when we've looked at 8 years of history, when we've analyzed what people have done, and it's not just on our exchange, it's exchanges in general, the interesting story is this. For the vast majority of people, dollar cost averaging would have performed better than their attempts at trading. In fact, even professional traders, what I would consider professional traders, more than half of them would have done better by just dollar cost averaging than professional trading. Now, there are some professional traders who do better than dollar cost averaging, who are spending many hours looking at charts, analyzing news, and creating relationships to give them inside information so that they can perform better than that. But the simplest way of trading performs better than almost every other technique for the majority of the time, which is dollar cost average. You can't get simpler than that, because after you set up the standing order, you never need to do anything again. And that's taking trading buying down to 1 to 0 steps.
That's the famous compound interest chart that they always show you in school and in uni, and heck, even as an adult when you go to the bank. You know, Matt puts in $1 at, 2013, and Obi puts in $10 in 2017. Who's going to have more money at the end of the day if they invested in Bitcoin? Probably Matt, because I started earlier and I kept, stacking the whole way up. That's how it works. And you guys have put a solution to that. I look back at that, and when I was doing research for this and I saw that was a product that you had on the platform, I was like, oh man, why didn't someone teach me about this back in 2013 or 2017?
And the funny thing is, if Matt puts the money in 2013 but starts to actively try to trade it, and Obi puts money in later on and starts dollar cost averaging or pound cost averaging, it may well be that Obi ends up with more because it's consistently going up. And if you have these temporary peaks in price, you're buying all the way up, but also you buy as it goes down, but it averages out so that dips don't affect you so badly, and your price ends up being the average of the peaks and the trough. So i.e. a smooth line, if you history of Bitcoin, a relatively smooth line just rising over time.
You got it.
And that's just a really powerful idea. And we want to get that idea out. And it's not just us. We would welcome seeing other exchanges offering and promoting this offering. The problem is it doesn't fit their objectives of getting people to trade as much as possible, and so that trade as much as possible between one crypto to another. We don't have that sort of crutch. We are able to tell people the fact that dollar cost averaging performs very well for most people compared to any other approach, and also for most people, holding Bitcoin is the best one to choose, especially as we saw yesterday. When the price does eventually at times sell off, Bitcoin invariably does better.
Folks, if you get paid bi-weekly, monthly, weekly, heck, daily, whatever the case may be, take a little small chunk of that paycheck, throw it into Bitcoin, do your DCA, and the rest will take care of itself. Do not gamble. However, if you do want to gamble, you should check out our friends at CoinPoker. You know they are the sponsor of the Crypto News podcast. I absolutely love these guys. They are incredible. They're the world's premier crypto poker platform, and they are a blockchain technology-based platform that was developed by an ambitious team of poker lovers and sports gamblers. They use USDT stablecoin as the main in-game currency and CHP as in-game fuel. Tons of benefits for everyone who plays. They offer very quick, fast, and instant secure transactions using USDT, Ethereum, Bitcoin, CHP, you name it. Best part, as I've said many times, no KYC. Literally, you sign up and you're dancing, you're ready to go. They also have a mobile app and a sports book. As you guys know, I love a little bit of sports gambling on the side. Not too much, but a little bit of sports gambling never hurts anybody if you are safe and cautious about it, which I am. There's also Texas Hold'em, just an incredible app, and I highly recommend you using it and giving it a try, as they also give away thousands in promotions every single week, folks. That is coinpoker.com. Go and check them out. Obi, before we jump back into it, you gambler at all? You play poker? You ever dabble in any of that?
Yeah, I've played poker. We had in the UK a crypto poker tournament where a few people in the crypto space would connect up, would go to one of the famous casinos here in London and have a go. There were a couple of charity crypto poker tournaments in the middle of the pandemic last year, which I also got involved with. To be honest, I'm not the best poker player, but I enjoy it. It's fun, and
it's a blast.
If I do it, I'm doing it with an amount that I'm prepared to lose. I see it as the money I'd spend if I was going to go on an evening out. I could and spend some time with friends, etc. So that way, if it does return and I get a great return, great. But if not, I get entertainment. And I would have paid for entertainment anyway.
Exactly.
And yeah, it's fun. It's a battle of minds, especially with poker. It's really interesting about human nature and seeing that there's so many different styles in which people can play the game. It seems deceptively simple, but it's actually incredibly complex.
Well said. And on the sports side, you're in London. Heck, you got to be a football guy, no?
I'm football, yeah.
Who's your team?
Well, you might not know them. They're called Queen's Park Rangers. They're a smaller team.
I don't live under a rock. I know who Queen's Park Rangers are. Okay. I know that.
So,
don't worry.
So I was born in West London, and they were my local team. And they were one of the few teams that would give away free tickets to anyone in the local area under a certain age to go and see. So I always appreciated that, and as a result, I've been a fan and resisted any urge to switch to some of the more famous UK and London teams.
You're loyal. You're not a bandwagoner. I love it.
Not a bandwagoner. And that's really interesting because, like with Bitcoin, I've chosen Bitcoin just from logic and analysis. I've reviewed the white paper. I've analyzed what it does. I look at other cryptocurrencies, and time and again, I reconfirm in my mind the logic for why it still makes sense. And I think that anything that you do should be constant. You should constantly be willing to test and retest it. And it's the same for going back to Queen's Park Rangers. There was a very simple logic for why I supported them. One, they're really passionate. The supporters are really passionate, but also, the way they supported their community was something that I thought was really powerful. And so I wanted to support them back. And that was my logic. And I think that many other larger teams didn't have that same attitude. And it's all about community. And you're effectively, as a football team, almost like you're the soldiers, the gladiators for your local community, and representing them on the field of battle, which is the football pitch. And so if the gladiators are supporting you, you should support them, and not a team the other side of the world where, you know, you support Manchester, but you've never even been in the city. That doesn't make sense to me.
That's my favorite part about football overseas, especially in Britain, is just the fans, like just purebred nutcases. Everyone, I absolutely love it. Like, again, I'm from Toronto. I'm a huge hockey guy. That's my favorite sport. But I've been to football games in Europe. I've been to, you know, American football games, hockey, baseball, soccer, you know, you name it. I've been to all of them. And then there's literally nothing like a European football match. It is something special. Obi, let's just jump right back into Coinfloor. Again, you guys have an incredible array of products. You have the auto buy, the custody, and for the advanced traders, you have the trading platform, OTC, the API, the corporate accounts, the fiat accounts, and the Bitcoin audits. But one thing I really want to discuss is how much you and the team put into the education aspect. You have an incredible guide on the website, coinfloor.co.uk, and you also write every single week. I've read a bunch of your articles on btctimes.com. Clearly, you know your shit. You are a good writer. Tell me about the importance of producing content and teaching the people. That is part one. And part two is, how does one become a better writer? Because clearly you know what you're doing and you like doing it.
So first of all, the importance of education, it's core to everything we do. And over time, we plan to do more of it. For too long, we didn't do much. We were silent. Behind the scenes, we would be at conferences and talks and giving our views, but not being public about it. And about a year or so ago, it was actually beginning of 2020, I believe. Actually longer than that now, actually, we decided that we were going to be more public about our opinions for the space. And it started with creating this section of our site. We call it monetary re-education, because we've been educated incorrectly about money, we believe. and we need to start this process to re-educate. Stepping up the podcasts and so on we do. And then last year I started writing weekly I was invited to write for BTC Times, and I thought I'll write a few articles. And I wrote one, and then the following week I wrote another. I never have any end date as to when I will stop, but as long as I continue to enjoy it, then I continue to do that. And it's not just me. We're now, my co-director, Tegi, has just starting up writing articles as well. She's just recently published one for Bitcoin Magazine, which is another Bitcoin periodical. And again, I'm hoping that she has a very different slant of things than me, a very different focus, but it's just as valid and just as interesting. And I'm hoping that she will continue that. But again, she will continue as long as she's excited and infused about it.
Quick question here about the writing process, because I'm very curious about that. Walk me through it. Like, do you open up a Google Doc and start with research and then sort of make a stencil and then edit and publish? Walk me through step 1 to step 10.
So high level, first of all, it's changed and it's become, you start to form a pattern. And we've got a pattern here. Also, I benefit from and I rely upon trusted advisors and editors, people I respect in their ability to write great prose, great words, to review what I do and adjust and help me correct my message. But high level, the way it starts is that I'm constantly, for example, in my case, and it's going to be different for Tegi, you'll have to ask her for her process, but I'm constantly reviewing what's happening in the given week. And that's not work for me. That's just my passion. I'm always reading up on what's happening. I'm always talking to people about it. And at the end of the week, you just step back and look at what's happened this week and what's an interesting message to talk about. But I have certain rules of thumb in my case. I try to avoid the articles that are purely just talking about price movements, 20% up, 10% down. I almost never talk about that unless it's highly relevant, but it will be to a bigger point. And my fundamental thesis is that we're heading towards this point where we have a Bitcoin hegemony, where Bitcoin is the world reserve asset. And so I look at what stories or trends happened in the last week, which are indicators or signs of this part of our movement towards greater hegemony. I haven't decided what it will be for this week, but one contender could be the fact that with all of this sell-off, Bitcoin still did really well. And what does that tell us? What does that tell us about the fundamentals of Bitcoin versus other cryptocurrencies, for example? That might not be what I actually talk about, but it would always have some link to that. And I won't go into the specifics of the price action. It's more, what does it mean philosophically, and how does that help us build confidence in this process happening? So I get that sort of fundamental core idea as a sort of snapshot to begin with. And then I would write some notes about it. And when I write some notes about it, then we go away and I effectively fill that out. Now, in terms of the style, what I found works really well for me is to start forming a style. I found what works. I found what people respond to. And that's the advantage of doing it for 3/4 of a year now. And I think this week will be article number 40. And I realize what people respond to, what I enjoy writing about, the styles I enjoy, the style I like. And it sort of starts to have a structure where, for example, my structure is I have a title. I want to make the title interesting but short. And I have an intro to the story to set the scene. I like to use a lot of storytelling and so on, or analogies, a little bit of reference to history. So there's a slightly, not too much, but some interesting pieces of information which people can then click and find out more about. And then I start to explain the core idea I want to get across. And then finally, I like to end with this rousing end, reminding you, bringing it back to the original point, and also getting the troops, the Jedis, the Bitcoin Jedis ready to fight the next battle. And that's the style that works for me. But I think everybody needs to find their style, and it's good to get into a pattern because then people know how to read. It's a bit like an intuitive user UX or UI. If it's consistent, then people know what to expect from your story. You know what to expect. It gets easier and easier to write.
When I read your stuff, for me, it's like 3 parts. It's like 1 part CEO, 1 part football coach, and like 1 part philosopher. That's like sort of how I see it. Like it doesn't like fire me up per se, but like it's a little motivating, but it's also, you know, you have that philosophy behind it. And you also have that, it's like, okay, clearly he knows his stuff and like it's motivating COI. So I don't know. That's just how I read it. But, again, I love him and I appreciate you going through that. Thank you. A couple of rapid fire questions. And I'm going to start by asking about a couple things that you've touched on in your articles for the BTC Times. The Bill Maher, tomato, however you pronounce his name, the late night talk show host, very famous in the US, famous around the world. He talks about BTC being a Ponzi scheme on his late night talk show. It sort of went viral. He made a big, fuss about it, and you had your 2 cents about that. I'd love for you to reiterate those 2 cents.
Yeah, well, the simple summary is that he's making the mistake that many people do, and not understanding what the purpose of money is. And effectively, he's following this bandwagon, which many other people have done. So we've seen, in the case of Elon Musk, he made these comments about the energy use of Bitcoin. In the case of Bill Maher, he's making these comments saying that if you come in later, you're going to make less than someone else who comes in earlier.
No shit.
Yeah, but this is effectively the case for all investments. With that logic, you shouldn't invest in Amazon, in Tesla, in any fast rising tech stock. But somehow it generally belies a concern about a new technology that operates in a way that's different to anything else that's out there, and an assumption of there must be foul play. And that's not the case here. The reality is that someone has solved a problem around money, which is the ability to store value and transfer value at a distance with parties that you don't trust. And that's an incredibly valuable problem to understand. The problem is that at the beginning, a few people understand the significance of that problem and the implications of it. Once it's materialized and it's very clear to everybody, the opportunity is gone. And as realization of the opportunity increases over time, the opportunity reduces. And that's simply it. What you're seeing is that the early people in this space, the people that he refers to as effectively the instigators, the architects of the Ponzi, aren't actually that. They're simply people who were lucky enough to have the time and knowledge and connections to be able to see this opportunity earlier and invest in it. But here's the point, and here's the not so secret. We're all still incredibly early.
Oh, yeah.
Here. Everybody who's heard of this, and now most people, at least in the Western world, have heard of cryptocurrencies and have heard of Bitcoin. You're still really early. You just have to make a choice, and be fortunate enough not to have friends who are going to give you the incorrect information based on their incorrect information, because that can sometimes prevent you from seeing the opportunity. But don't trust, verify. Try to yourself go forward and look through and understand from a base. And there's just so much education resources out there that are designed to be very simple to understand. Understand yourself and form your own view as to whether or not this thing is a Ponzi, is an energy sink, or actually, in my view, doesn't doesn't in fact waste energy, but helps save energy. It isn't a Ponzi scheme, but in fact, it's just accumulating value as people move value from other less efficient stores of value to it.
Not your keys, not your coins. How many times has that been tattooed on human beings around the world? Over, under 1,000?
I think I would hope it's over 1,000, although I'm not a holder of tattoos myself, but I'd hope it's over 1,000.
I can't wait. I've seen a Bitcoin tattoo on someone before, but imagine like someone takes off their shirt to like jump in a pool or the ocean or the lake or whatever, and you see it not
your coins.
Oh,
I think
man.
It should be tattooed in people's minds, in their philosophies, though. And again, I think just incentives are going to. What's really interesting, incentives are going to cause that to happen more and more. I think for your core Bitcoin storage, there will always be some people who would want some of it stored in a way where maybe it's in a multi-signature mechanism, which basically means that they have one or more of the keys and someone else has one or more of the keys who they can work together to make transactions. So that's where custody could be shared. But as some will become confident and comfortable with custodying themselves, and they will custody that themselves. But there will always be some people who would want to delegate the custody to someone else. But the reality is until you're custodying yourself, it's not your Bitcoin. And so taking the time to learn to be comfortable with that is a very, very important thing that most people should do.
When and if will Bitcoin hit 100K?
I don't give predictions publicly. I give predictions privately. But I don't give predictions publicly. Come
on, give the people what they want.
And I think it's a probability based thing. I think that there is still a significant possibility that it doesn't make, I still think that it's likely to be a cycle right now. So I think there's a significant possibility that it doesn't make 100K, but I think most people think that there's a good chance that this time round it could get above 100K, and I still think that view is still the case. However, this is not investment advice, and I think the best way to handle it is to be in a view set where it doesn't matter. And the only way it doesn't matter is if you're dollar cost averaging, you're buying regularly, because then
stacking.
If it doesn't reach 100K, you are still accumulating all the way up. And if it does reach 100K, you're accumulating above that as well. And you just don't need to think about it.
Last question. Who is Satoshi?
We are all Satoshi.
Come on, you gotta give me one name. Give me someone.
That's the answer. You're Satoshi. Your viewer is Satoshi. Satoshi at this stage is a mindset, and that's who it is.
Haven't heard that one before. I like that. Obi, this has been an absolute treat. So glad we finally got to connect. I learned a lot, and I'm sure our guests did too. Before we let you go, could you please let us know where we can find you and Coinfloor on socials? So
Coinfloor, it's at Coinfloor. So CoinFloor on Twitter, and our website coinfloor.com and coinfloor.co.uk. And soon our mobile app you can download as well from Android and iOS stores. And then myself personally, the easiest is Twitter. And it's because I was early to Twitter, it's at Obi, O-B-I.
I was going to say, you snagged a very rare 3-letter Twitter domain. Not bad.
Yeah. But it also shows my age.
Like, as you said earlier, you're one of the OGs. One of the original gangsters. Obi, it was an absolute treat having you on. Thank you so much. Hope you had a blast, and would love to have you on for round 2 in the future.
It was a lot of fun. Thank you very much, Matt.
Appreciate it, folks. This is the Crypto News Podcast with Obi from Coinfloor. I had a blast listening to this one. I hope you did as well. I learned a lot, and I'm sure you did too. If you enjoyed this one, please subscribe. It means the world to us. We are on all major podcast platforms: Apple, Spotify, Google, Amazon, Overcast, Stitcher, you name it, we're there. Check us out on cryptonews.com. We will be back every Monday, Wednesday, and Friday morning. As always, we appreciate you, we love you, and keep on stacking, and we will see you shortly. Have a great rest of the day, and we will keep in touch. Bye.